Good morning. Welcome to the BF Anderson Technical Report for September the 19th. Well, the Fed cut rates yesterday. Unemployment numbers came in this morning, which were jobless claims, were better than expected. The economy's doing well. The Fed acts as though they don't really need to cut rates. I kind of agree, but they did cut rates a quarter. Let's get right in to see how the market's reacting to all this. Again, we're at the NASDAQ. This is a daily NASDAQ. We're continuing, as you can see here, we're making higher lows, now making a higher high, holding above the lower moving average. The lower moving average has turned up. This is positive. In other words, the NASDAQ's on a buy signal. Now, on a weekly basis, you can see here we continue to hold that 35-week moving average. We had some good volume coming in last week. This looks very positive as well. Now, the advanced decline line kind of rolled over a little bit. Had a little bit of a correction here, but we are still in an uptrend on the advanced decline line. High-low index, stocks are making new highs. We're close to a new high on the indexes. Looks very positive. New lows, we only had 9 new lows yesterday. We're seeing a real improvement here in the new lows. We're not getting a lot. On the long-term indicator, looking really strong here. Remember, we get into these bear markets like this where you get the crossover. There's no bearish cross here. In fact, the moving averages are improving. This is the 10-month versus the 20-month. And as you can see, the index is very close to making a new high. On the fear-greed indicator, which is the put-call ratio, we got up into extreme fear. Now we've pulled back into what we would call neutral. So we look like we're kind of stabilizing on sentiment. On the 200-week moving average for the S&P 500 continues to stay in a very strong uptrend, and we're close to making a new high. So things look positive on that front. Value line geometric, again, we're trying to measure the average stock. Really not breaking out, however, is improving. We are getting a higher low here. Now, I'd love to see a higher high, and I'd like to see an uptrend. This is really an important indicator. If this index gets going, it's going to really mean that the market's broadening out. So as I go to this next chart coming up on the small caps, that could be a sign that the market is starting to broaden out. Now, on the global stocks, the global Dow, we're kind of like in the same situation, just moving sideways. If this could get going and get into a strong uptrend, it tells you that not only the U.S. markets are broadening out, but the international markets are broadening out as well. Now, this is a graph that I did to show you how the small caps are doing. The small caps are challenging a falling resistance line. So here's your resistance line. Now, the way I've set this graph up here is I have the index on top, and I have a relative strength line on the bottom. Now, what relative strength is where you take the price of the index divided, which is the small caps, and you divide that by the Standard & Poor's 500, and when the line is going up, the small caps are doing better than the S&P 500. Well, we all know that the small caps have not made a new high in quite a long time, and because of this rotation we're seeing more into small caps, this is a very good sign for the rest of the market, because just think about it. If the small caps get going, the smaller companies, it means that investors have enough confidence in the economy that they're willing to step up and start buying the small caps. So if you look at the relative strength line, you can see that really since March, and actually February, the small caps have been dramatically underperforming the market. Well, all of a sudden here in the last couple of weeks, we've seen a major breakout and a breakout above that relative strength line or that trend line, and then the relative strength line has moved up. So what it's basically saying is the small caps are improving, and that's good. Now, I wanted to go back and just look at the 200-day moving average on the S&P for a minute. This is 2008, major recession. The 200-day rolls over and goes into a severe downtrend. So this is what a bear market looks like. Now, we can also go back to the year of 2000, 2001. You see the same concept. You get the rollover. This is a bear market. Looks pretty dire. However, this is where we are today. This looks nothing like this graph here. This graph here is saying the market is and the economy is rolling over. We're not seeing any rollover whatsoever here. This is a very, very powerful uptrend. Good news. Now, here are the top the top 5. Now, as I say, there's a lot of rotation going on here. Move slowly. This is really a watch list at this point because we're not sure where this market's going to go, what direction. But here's biotechnology. This is Allakos. This is a new company on the list called Arconic. This was a spin-off of an aluminum company, and they're involved in aerospace. And you can see that the stock has been very tight trading range above the 10-day moving average. This is kind of a move into the industrial sector. We're seeing the small caps, specifically industrials and financials, are really kind of taking the lead here. This is Lam Research. They're involved in equipment for making semiconductors. Again, very powerful uptrend, looks good above the 10-day. You got your gap up right here with this extreme high volume. Lam Research looks interesting. Now here's another example of where rotation is taking place. This is Roku. This was one of our big winners this year. You know, we started to see the stock, it broke out, hit an all-time new high, but then all of a sudden it breaks down below this 10-day moving average, and we became very suspicious and sold the position. So you can see it's breaking down again yesterday, and so far in the pre-opening market this morning, it's breaking down again. It looks like the competition in the streaming industry is really picking up, specifically Apple. Now here's Target. Again, we got the gap up, somewhat of a flag formation here that's starting to kind of roll over. I would keep an eye on it. So all in all, what I'm saying is the market's going through a rotation here. We're going to see completely different names take the leadership position, and the old names, well, they just may not do anything for a while. If you have a question, give me a call. Thank you.